Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. I just want to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. Guys, it's going to be pretty brief and to the point here because nothing major has changed, and I've got sinuses like crazy. I'm Googling sinus transplant. Got to do something. But anyway, look, we stay inside this wedge pattern with today's close. Broke down underneath it for just a little bit, but not so much that I would say the pattern busted. And then it came back tested, and then bounced, got back up over that midline even, and now looks like it's, we're going to go up to that top line. So, as long as this line continues to hold, and I'm not counting this as a break right here because it just didn't last very long. It didn't act like a break. So what does that mean? Does that mean that I've got this pattern all wrong? No, not necessarily. It really maybe only means that that maybe our starting point isn't this exact bottom here. It's like, well, maybe this is the wedge. Things do not always line up perfectly the way you'd like for them to. Often they do, sometimes they don't. So that was a pretty strong bounce we got here today, and I'm going to still put this back where it was. Take my lumps in case I get it wrong. But there you have it. Nothing really, what can I say? I will say this. That's what I'll say. This little pattern that we had right here looked a little bit weak at one point. It was almost like, what am I trying to say, a rally here, a higher rally, and then a shorter rally in another one. So this almost had a little bit of a complex head and shoulders to it. But it never broke that neckline. Now, what does McGee say about head and shoulders patterns? Of course, he's not talking about patterns on a 10-minute chart. But he says in general, if you see a head and shoulders pattern or an inverted head and shoulders pattern that fails, you should still take it as a warning. So in other words, if you've got a head and shoulders top and the market gets close to breaking the neckline, then it just shoots back up, you might say, wow, that was a bullish pattern. No, it was still a bearish pattern. It's just that the market is beginning to show you something about the underlying technicals. But something took place that pushed the market on up even higher. I encountered that with a short position I had a long time ago. It was a perfectly formed head and shoulders. It broke down, came back to the neckline. I was shorting it like nobody's business, and it just absolutely took off like a rocket. And I got out of it with a loss. And what happened over the next 5 to 6 months? That small, or rather that head and shoulders that I was trading, ended up being the left shoulder of a huge head and shoulders pattern. And as a matter of fact, I remember the stock. I remember the prices. I shorted that thing at about $19 a share. It went down to 17 or something. I didn't cover, and then it ended up going. I covered before it got there, but it ended up going to 37. And 37 was the all-time high. I came back to it a year and a half later just to see how bad it would have been had I continued to hold my short position. And it was trading for 27 cents. So, anyway, I say that because this does look like a little sign of weakness here. whereas this consolidation had a clear horizontal neckline that once we got over with gusto produced a nice move up. This does not have exactly the same kind of bullish shape to it. Now, it may be that this ends up being a little bull flag, which is kind of what it's looking like. But again, I still think we're in an ascending wedge pattern, and today's bounce, like yesterday's bounce, kind of seems to bear that out. And we are headed up probably to test the mid 1330s. And if we get there, I would expect that level to be difficult to get through. Not saying it can't be done. I'm just saying I think it's going to be a real chore. If the market does get through this, then that's some strength that I think we need to stand up and take it and be aware of and pay attention to it. So look, that is the S&P 500 update for January 25th, 2012. And reminding you again that we are looking at this inverse head and shoulders right here as a continuation pattern. And if we can get over that blue line, 1378 to 1380 is the target. So very interesting days. Let's see what happens tomorrow. Thanks for watching the video. If you're a subscriber, thanks doubly. If you're not a subscriber and you're seeing this a little bit late, then maybe think about subscribing. The response has been very nice. I've been very happy with the number of people who've signed up, and boy, just a very large percentage of those who sign up stick with it, have been sticking with it too. So I really do appreciate that as well. Take care. There'll be another video tomorrow, brought to you by SB500chart.com, using time-honored techniques to understand modern markets. By the way, if you want to sign up for a subscription, it's $19.95 a month or $189.95 a year. And every subscription starts off with a 2-week trial for $4.95. That's the cost of one grande caramel macchiato at Starbucks. And the whole subscription is like less per day than a cheap cup of coffee out of a vending machine. So hey, think about it. Thanks.